Wall Street's main indexes marked record closing highs on Thursday, with the Dow and S&P 500 ticking up marginally and the Nasdaq adding about 0.4%. With no official government data available due to the U.S. government shutdown, investors monitored information from other sources. A report from global outplacement firm Challenger Gray and Christmas said employers' hiring plans so far this year were the lowest since 2009. This followed the previous day's weaker than expected ADP National Employment Report. The lackluster jobs data so far has led traders to bet widely that the Federal Reserve will cut interest rates 2 more times this year, including at the end of October. But Brian Mulberry, client portfolio manager at Zacks Investment Management, says don't bet on it.
I'm not so sure that we're going to get the next rate cut. And there might be this wild card with the government shutdown. Since there's no data and the Fed is data dependent, they might have to pause the easing cycle until they get more data. The market is not ready for that. They want this easing cycle to continue. We are still where rates are restrictive on capital formation at this point in time. They need to continue to go down to support the positive momentum that's baked into the S&P 500, now over 6,700 points.
Wall Street on Thursday was boosted largely by tech stocks, with Nvidia, Apple, and Broadcom all closing higher. On the flip side, consumer discretionary stocks were the biggest drag on the S&P 500, due largely to a sell-off in shares of Tesla, which ended down 5% for its biggest one-day percentage loss since late July. And shares of credit bureaus Equifax and TransUnion fell 8.5% and 10.6% respectively, after FICO launched a program that could allow mortgage lenders to gain access to credit scores without relying on the bureaus. FICO shares surged almost 18% after the news.